Good evening, everybody. All right, tonight let's spend a little bit more time on analyzing what the overall market is doing, which has a reflection on what type of charts or what type of positioning you want in your portfolio. The other day, Thursday, we had a day where they had taken the markets well below the 200-day moving average, which would have kind of taken you out of that support level of this wedge formation. And if I can draw this is a continuation of that downtrend, and pretty much using the 200 as the bottom part of that wedge formation. So it's not that we're using the wedge formation to make our analysis. We're using the wedge formation to see what everybody else is doing, and we have much more clarity when it comes to the bottom or the top of that formation of what type of signals occur at those levels. So today, after a big up day on Friday, bringing us back up off the 200, back up above the T-line, and right back into the middle of this wedge formation, that was our first inkling that they're not going to break down, that we're still in the kind of the wedge formation. Today, observing the obvious was the Dow came up to the 50 and backed off a little bit. The S&P 500 came up to the 50 and backed off a little bit. Now, that doesn't necessarily mean it's failing here at this top resistance level. It's telling us they need some more juice to get up through that level. So here's the most compelling chart, which is the NASDAQ, pretty much indicating that when they did come up through the 50 today, when it closed at that level, that there's a change. That this resistance level is now not acting as a resistance anymore. But there's a new dynamic. So that alone should be indicating that there's probably some bullish force now that's not concerned about that downward trend channel. Now, part of the analysis also was that we knew, and I don't know why this chart is doing this. Part of the analysis was that today crude oil had come up here and it actually closed back down here, doing kind of a doji. I don't know why they shifted it, closing up there, but what that did was quite a few of the oil stocks produced these type of signals. This is Whiting, a shooting star doji after gapping up. Same scenario with CRZO, which we've been very happy with because it was a nice steady eddy, but then look what happened during the day. And this is why you want to understand what happens in human nature. And this is exactly why the Japanese race traders created or identified these signals for us and what would happen at different levels. So there's just their simple observation. Where do most people buy? They buy exuberantly at the top. And what dictates our terms as being the top? Well, if you see a strong, steady uptrend, stochastics in the overbought area, and then all of a sudden you see some very huge buying, what's the first thing we should do? And that's obviously move to your 10-minute chart. 10-minute chart. And notice what happened. Came up strong today, leveled out. So this is why the the use of any time frame is just as relevant as any other time frame, which was telling us if they were holding up at this level, they shouldn't trade back below the T-line. The reason we started taking profits was what was our alert in the first place. Very simply, look how far away we are from the T-line in an overbought condition with big buying occurring in that overbought condition. So, again, this is just kind of common sense, step-by-step analysis that if your daily chart is in an uptrend and you see exuberant buying, instead of getting out here, we were getting out up here because of the being able to move to the 10-minute chart and the alert that they were that far away from the T-line. So if you just kind of use common sense, or the common sense that's built into the graphics, it allows you to analyze what's actually happening to price movement versus what usually gets in the way of, if they get in the way, like myself most of the time, letting the emotions come in, because it used to be, and it sometimes still is, that everything's good, and then all of a sudden everything's great. Maybe this is a big breakout, and we're going to make lots of money on 2 or 3 more big days. But now I know, that's that simple rule. Where do most people buy? They buy exuberantly at the top. The further away you move from the T-line, the more you need to get ready to take profits. We also own SSW, ever since it did the best friend signal. Just want to stay with this steady uptrend. SIEN. These are all positions that we've got going on, or they've been recommended over the last few days. SIEN. There's your belt hold J-hook pattern. You can see the classic fry pan bottom, strong price move. J-hook pattern, and what told us the selling was disappearing? Belt hold type signal, stopping up a lot of the sellers. Wave 3. So anytime we can see a pattern set up, like an EGC, this is wave 1, we've got kind of a projected target, which is this wave right here and this wave right here are going to be the same. So whenever you start seeing this setup, even if you've missed this price move, we know what the magnitude of this price move should be. ECYT. There's our doji sandwich. What's a doji sandwich imply? There's going to be more upside. What's this little pattern imply? Fry pan bottom breakout. So there's a couple things going on here. But if you just watch to see what everybody else is watching, if I look at something like this, what's this tell me? Now they've had a breakout from here. Or if I look at something like this, it might almost be horizontal, about ready to break out of everything. So if we break out of everything, what do we got going on? Wave 1, wave 2, anticipating wave 3, starting up. Somebody was asking the other day whether WABA, whether the volume was big enough. You can usually give it a little bit more leeway on something like this with a $20 stock where you might not have 200,000 shares on every given or every trading day. You might be looking at a 180,000. Depending on what your volume you're trading, give it a little bit more leeway because, number one, you got a pattern. Number two, on a $20 stock, what you're trying to do with a minimum of 200,000 shares a day is keep from having to get stuck in a position where you're having difficulty getting in and out. Elliott, let's see. Yeah, kind of a double bottom, but I consider this more of a wedge type formation. Where you can see the consolidation until they break it out to the upside. Let's see, what was I doing here? Oh, another oil stock. Just plain as day, a J-hook pattern. Now, why do I say plain as day? Because when they pulled it back, what did they do right here on the T-line? Spinning top, inverted hammer, long-legged doji, and then bullish confirmation. If you did a 10-minute chart on if you RP, what was our prerequisite for flipping to a 10-minute chart? That you were at the top of an uptrend. This is now just more of a breakout of a pattern, so it's not like you're in a overbought condition. So over here, I would use a 10-minute chart because look what was your prerequisite. A strong price move. What's happening here? A new wave setting up. So there's a now this one, remember, this is what we're looking for. We took this chart, said, all right, we've got a fry pan bottom, we got a huge big move in the overbought condition, and where are we compared to the T-line? Yeah, that's where you flip to your 10-minute chart. Here, it's now looking like a beginning of the next wave to the upside. Wayfair, still own this one because of your left-right combo, island reversal. Remember, an island reversal is you can draw right around this without touching anything. Strong price move. And how long do you hang on to this one? Until you see a sell signal. Now, again, you're starting to move away from the T-line, but you're still working off this very strong. Anytime you see a gap up, it's going to be a while. So I would suspect they're coming back up here to test this level. We recommended YEXT because you can see the J-hook pattern setting up, a Morningstar type signal, bullish confirmation. What we were looking for is kind of a breakout of this area. It didn't get there. So, but even if you bought on positive trading today and it did a doji, now what is your trading criteria? Well, we know very simply that the price will usually move in the direction of how they open after a doji. If they opened it lower, what do we want to do? Close out the position. Because if they have a doji and they open it lower, they're going to usually move in the direction how they open it. What would that tell us about this level? That this level is acting as a resistance level versus getting ready to break out through that level. Pink, you just stay long on this one. However, notice the magnitude or the nature of this uptrend. Doji, doji, shooting star, doji. Not very powerful. So what's this alert us to do? Watch this level and have a safety stop below the T-line, because if they took it in this direction after 5 or 6 dojis, what was our decision? They were going this way. They weren't going this way. So that's where the benefit of knowing what should happen after a doji puts you in great analytical advantage over most investment techniques, just because of that simple rule of the doji, what we call the doji rule. Here's Tile Shop. It started up today, but backed off. That's not a great sign. So here comes the next analysis. What should this do to stay in a J-hook pattern? It needs to open positive and trade positive. If it opens lower and starts trading lower, what's happened to the J-hook pattern? It's disappeared. Now you're probably more in a sideways mode. You close it out. MPLEX was kind of the same scenario. It came back. It was trading up nicely, telling us we had a J-hook pattern. But as soon as it came back down through today's open, you would immediately be able to recognize that this is now a dark candle. And the fact that it closed back below the T-line, what's that tell us about this uptrend? That it's not very powerful, and at best, maybe it's going to waffle up and down. But this would have been a good indication today to say, this is not the best place to have your money. Close out the position. CLSD, same scenario. We had a fry pan bottom. What's our simple rule of a fry pan bottom? You can stay long as it doesn't close below the T-line. What did it do today? Close below the T-line. So what did that tell us, number one, about the fry pan bottom? You should be out of it. Number two, how did it do it? Bearish candle, doji, bearish candle. What do you got going on? A bearish doji sandwich. What's that imply? There's going to be more downside. That's why whenever you close below the T-line, the probabilities of it going in that direction are much, much greater. Close out the position. In RCL, I closed out some calls on this on Friday with the anticipation that they're ready to bounce it, kept the stock, and so what did it not do today? Did not confirm that bullish engulfing signal. We're still short this position. So there's been a lot of money being made right now in this market because of the obvious. Here's Labu bringing things back up above the T-line, telling us that that sector is probably picking up some steam. But what was really making the money were these big stocks that had been moving sideways, like NVIDIA. And then it had kind of a bobble breakout on Friday. Very strong price move today. Is CLSD ready for a short? I wouldn't. Because where do you suspect your next price move would be? Probably back to the 50-day moving average, or the 50 and the 34, since the 34 seemed to act as support over here. That's not a huge percentage move. That'd be first of all, it's probably not a huge move to the downside, and secondly, it looks like the markets are probably more of a bullish trend than a bearish trend. I would rather find something that's going to go with the trend. Notice what Tesla is doing. It's right at the case of a bobble breakout. So if this opens positive tomorrow, you can be buying this one just based upon that, what our expected results of a bobble breakout are, that it's going to have a high probability of moving higher. The reason we recommended Netflix today was because look what happened after flat, indecisive trading. A left-right combo off the 50 up through the T-line. Positive trading today. I mean, observe the obvious. The 50 appears like it's holding as a support level. Amazon, I'm guessing, did it close at an all-time high today? it was pretty darn close. Looks like it closed just above the high over here. Not that you want to trade it, obviously more of an option trade, but the fact that Amazon and all the ones that are in the limelight are trading positive. Apple did another gap up, not quite in the overbought area, but closed right back where it opened today. Oh, exactly. Now, 2 cents difference. So for this uptrend to continue, you definitely need to see this open positive and trade positive. 1638, and was that an all-time high close? The bobble breakout. Look what happened when it came up and hit, when NVIDIA hit the 50. Pulled back. Now it came back up through that same resistance level. So when it hit the resistance, it bobbled in here and then came back up through. All right, some others that were looking good today. AAOI. What did you have going on in this one today? A J-hook pattern and a doji sandwich. What's that tell us? If it trades higher, it's probably going to beat this level, telling us wave 1, wave 2, going into wave 3. So, again, setting up, I wouldn't buy here because that's the top of your uptrend. I'd rather be buying here, telling you that your next, the new strength in this one is going to take you higher because of the J-hook pattern. Smart Global, another one that's breaking through all the moving averages. This one you could probably be buying. There's a little gap right here. So if it came up and filled that gap, at least you know it was heading in the right direction. But if it does a strong price move, you've got the same potential as that move right there. Dina, thank you. AAOI reports tomorrow. So we always get the question, do you buy when you know the earnings are coming out? And the answer is, you wait to see what it does going into the close. Because more than likely, the people that know exactly what's going on in a specific company and how they're doing are either going to be buying or selling in anticipation of what the earnings will be. So you got to assume that the people in the know are making their decisions. And so if tomorrow this closed up right at the top end of the range, you might go ahead and buy it going into the close. SRNE, observe the obvious. Fry pan bottom, where did it break out? Through the 50. That tells you that the 50 is not going to act as a resistance level anymore. Oh, what's that? Derm, kind of the same scenario. Kind of a fry pan bottom. There's your dimple. This half right here is usually about the same as this half right here, and you're just getting to the breakout level. You want to be buying this one if it comes up through the 50. So it's pretty much giving you a good setup as far as when something is likely to happen. So here was your breakout level on GTX or GTXH. And what did they do at this breakout level? Gapped it up, telling you wave 3 has started. ADMS, This is why you want to use this information. Notice what they did. A big, huge hammer. And what was the final criteria of where they closed this on Friday? They didn't close it below the T-line. So you got a huge hammer, bounced off the 50, came back up. What did that tell you? That the bears were not going to push this down. The bulls, because of this signal, so if any buying occurred here in kind of a sloppy but a fry pan bottom, J-hook pattern in progress. RCM. Pretty much a breakout, kind of a double bottom, should be in new territory. NT, CT, look at the belt hold. Now what happened? Remember when we did our session on the belt hold the other night? What's it imply when they open it up and they come right back up? They have eaten up or sopped up a lot of the sellers. Which means any buying after that has very little sellers in the way. So something like Rock, big belt hold, left-right combo, no sellers in the way. More prospects of any buying is not going to have any adverse effect. ADMS, how do you hold on that day? If, let's see, ADMS, you probably wouldn't. If I was long and it opened up here, as soon as it probably came back down through the T-line, what could I see was happening? At a bearish engulfing. Where would be my ultimate place? I have a sell stop right here. Comes all the way down. Now, if I stopped out here and it closed here, what's it tell me? There's sellers. Probably more downside. The fact that I could see that they sold this off, bounced down here, came back up through the level I sold and closed above the T-line, what did that tell me? This was my safety stop, but now I've got another signal. I can get ready to start buying on positive trading. So I missed out on the difference maybe of here to here, but that was insurance that I wasn't holding on to something that was going to end up down here. So you don't avoid the fear. You do what the mechanics tell you to do. They're selling, get out of this position. Whoops, now they've turned it around. You can always get back into the position. Remember, candlestick signals are telling you what's going on in investor sentiment. It's trying to point you in the direction of what to do when you see the signals or patterns telling you when it's time to buy. But it also is very effective to tell you when to get out of a position and or get back into a position. So it's not always telling you when it's time to buy. It's also showing you what to do when other price movements are occurring. CINA. You can see what's happening here. Now you've had a little gap up. I suspect your first target is going to be back up here. Now the oils did well today. I say the oils did well. Some of them did well. Neighbors. Still looking for this to break out through this level, but you have a little doji gap up, so it implies that the oils, even though some of them took profits today, others were still moving up. This is CVI, J-hook pattern. PDCE, a J-hook pattern. Now, what's the relevance of this J-hook pattern? this was our resistance level, look what they did after an inverted hammer bullish confirmation. They gapped through what we would have assumed would be a resistance level. So what's that tell us? That this is not going to be a resistance, that they have no concern about this level anymore, that we're in wave 1, wave 2, in wave 3 with not only confirmation but very strong confirmation that things are going higher. Wow. Oh, come on. What do we got here? Kind of a little scoop pattern. Is it relevant? Well, we got a bullish engulfing. We got a hammer. We've got an inverted hammer. So we got indecision going on, and now we've got a scoop pattern coming up through the T-line. We can be buying this with the anticipation that if they break through this area, you've got a slingshot effect to the upside. Belt hold worked well in PDCE. No belt hold that I see. This is the inverted hammer. This is there's a left-right combo. Does all your selection you are talking about have minimum volume of 200,000 RP? Yep. Before I even start my scans, they're already set up in a universe that has at least 200,000 shares a day. So some days maybe it's only 140, but the average on the last 90 days is 200,000. Shooting star, yes. So if we know what to be looking for, Jay, on a shooting star, yeah, if you miss that sale up here, and you saw it close back down here, now, if you see it gap up, where would have been a very logical safety stop if you didn't flip to your 10-minute chart up here? It shouldn't come back down through the open. Because if it does, what do you got going on? Some sort of candlestick sell signal. Now, what's your criteria? Well, we know very simply, if they open it lower after a shooting star, you want to close out the position immediately. If we miss the intraday sell, sell tomorrow. Or just rely on the J-hook. No, you can't rely on the J-hook. Remember, the number one criteria for any decision making is the signal. Everything else is kind of an estimate or a calculation. Calculating this is wave 1, wave 2, wave 3. But this is your important factor. What are the signals actually telling you? So anytime I see this type of thing, big hammer, remember that's why it's one of their 12 major signals. And then bullish confirmation. What's that? What do the Japanese race traders tell you that's telling you? That the bears hammered out the bottom and the bulls stepped back in. Fate, another scoop type pattern setting up. So if you're buying this one on positive trading tomorrow, first criteria is you want to see it get through the 50 and get through the handle. If it does, you've got a high profit trade because that's going to be your slingshot effect coming out of the scoop pattern. And GWPH, wave 1, wave 2, kind of broke out through wave 3, or through wave 2. Wave 3 should be the same magnitude. So for those that are buying options, this gives you a very high probability trade setup. But if you can see a resistance level and buying, tells you can be buying immediately. That's the exact reason why we recommended Netflix today. Because if you've got a left-right combo buy signal things setting up. If it opens positive, it's confirming your buy signals. And IBP, there's your Bobo breakout. Came up, failed, pulled right back to the T-line area, get a left-right combo. Where do you think your next likely target is? High probability you're coming back up to the 200, wave 1, wave 3. All right, and I haven't even looked at any shorts, only because right now I would think the prospects of heading higher, especially breaking out. Remember what we've gone through for the last 3 months now. After a huge run-up, it's not unusual to see this consolidation. And where did this consolidation support? Right about in this level, which also coincides with what everybody else is watching, where they actually pulled back right smack dab to the 200-day moving average. Now, if they break out through this level, we could probably have another session going like this. Remember, prices move based upon investor sentiment, not upon fundamentals. So this is why we suspected after Friday that there would be more upside, because what did this tell us? This told us that everybody was confident that they weren't going through the down through the 200. There's probably going to be that investor sentiment following through on more upside. But the real compelling piece of information was the fact that they could gap the NASDAQ up through the resistance level. Okay, that's about all I got for tonight. Are there any general questions on candlesticks? RP, the stochastics become more relevant when you see a signal in the oversold area. They become less relevant, or they usually are in the overbought condition, if you see a pattern setup. So as you can see here, when you had a pattern breakout in EAMS, your stochastics were much closer to the overbought area versus seeing where they reversed at the bottom with stochastics in the oversold area. If Apple opens low, that means it's overbought. It means there's likely some profit taking about ready to occur. But here, there's kind of a general rule that after the third gap up, you might see profit taking. So you've got gap 1, gap 2, gap 3. Now this is the most dangerous one, because it's a doji gap up, not quite in the overbought condition, which means they might not reverse it. They might wobble it for a few days, waiting for the stochastics to get up into the overbought area. But I'd be very conscious of how they open this tomorrow. Okay. All right, I guess with that, Jim, go ahead and do the double line. And in 2.6 seconds, do the next double line. Repeat. There's 12 major signals, and those are not what I should give you. Those are what you should be learning. Learn the 12 major signals, and there's about 6 or 8 patterns. Learn those. That's the whole basis of everything we teach in here. That's where you can understand this is a bullish engulfing signal, or this is a bearish engulfing signal, or this is your bearish best friend. You shouldn't be learning that as we're going along. That should be something you've already learned, and this should be just confirmation of that or those signals. Goose, you just stay long. right about at the breakout level. Nomad. Not a great chart, and I say not a great chart in the respect that it's kind of just waffling in here. So what you really need to see is a breakout out of this trend, which is right where you are. It's still not a real fantastic trading chart just because of but you do have a J-hook pattern setting up, which would imply that if this is wave 1, wave 3 should break you out of that area or that resistance level. CVRR, all you can do here is stay long. Your safety stop should be at today's open. So you've got two things that have happened. Either they've gapped it out through a resistance level, telling you there's more upside, but always have a safety. Anytime you're in the overbought area, always have a safety stop somewhere, because you don't know when they could slam something. Let's see, AXON. That's a good little breakout. Just make sure your volume is relatively hefty. That should have broken out. That's a little bit of a danger signal. The fact that they closed it back down at the low end of the range, which tells me if they open this lower, they're not going anywhere. They're back into this trading range. You want to definitely see this open higher and trade higher to stay long. Colony North Star. Another fry pan bottom that all you can do with this is stay long as it stays above the T line right now. And WTI. Shooting Star. Same scenario. If this opens lower tomorrow, take profits. It's coming back to test the T line, but then it's right back into kind of this congestion area. Let's see. Another one's having a hard time. This is EXEL, having a hard time getting through the 50. So you watch for a bobble, meaning see if they bring it down a little bit, and then you get ready to buy it if it comes back up through the 50-day moving average breakout area. CYRX, you just stay long. Good little breakout. OCUL, another one you can be buying on positive trading, breaking out of this congestion area with a bullish Harami right smack dab on the 50. ITCI, another one you can be buying, just watch to see what happens once you get to the 200-day moving or the 50-day moving average. UPLD, I'd be more apt to be buying this one. Kind of a little scoop pattern setup, and observe the obvious. They couldn't close it below the 50-day moving average. Cliffs, get ready to buy this one on positive trading. Your Doji sandwich breakout. And Iron Mountain, slow. You need to get through this level. So if this opened lower tomorrow, you can stay with it as long as it stays above the T line. But it's going to get more strength once it breaks through that resistance level. HTGM, another little J-hook type pattern. You got to definitely watch to see what this one does at the 50. XNet, this one is danger. The fact that they took it up and then they closed it back below where they opened, the only thing it's got going for it right now is it closed at the T line, which means it has to open positive to stay long. If it opens lower, you essentially have a shooting star, a doji, and then a lower open. would more than likely tell you a stochastic's kind of drifting, but they're going to come back down to the 50. And SPWR, this one you can buy on positive trading. Your inverted hammer doji, stochastics and the oversold area, you can buy this one on positive trading and then use the T-line as your stop. Don't let it come back down through that level. LRN, another one that has to open positive if you're long. If it opens lower, close it out. It's coming back to test the 50. Freeport, nothing yet. I wouldn't be short, but I wouldn't be long. And Squirm, stay short. If this opens lower, it's heading to the 50-day moving average. Goog, not a great one to trade because it's sideways, but if it gets up through the 50, then your next target is obviously right here. If it breaks through this level, your next target is fill in the gap, which makes it more difficult as a trader, but a good indicator that the bullish sentiment is staying in the market. Another left-right combo. If this starts trading positive, breaking this little downtrend, first target should be the 50, and then see what it does from there. Intel, if you like it, you can stay long. You're just not going to make very much money on this one. AKA, I don't know what that was referring to. MEOH, that's a good looking chart, especially if it opens positive tomorrow. Look at all your indecision right smack dab on the 50 with a bullish engulfing. If it opens positive. Now, if you went long today, you definitely don't want to see it trade back below the T-line. It tells you the strength disappeared. You can buy this if you like it. Another one that is not going to make you a whole heck of a lot of money. XENT. This is why you always have a safety stop on. This one you probably can get ready to go short. You definitely should not be long that one. And TSM wouldn't be long or short, not until they can get above the T-line. X-ray, another one that if they come back down through this level, you want to be shorting it. Now you have a wave one, wave two. Notice what they did today. Came right back up to the T-line and failed. That tells you there's probably more downside to this one. AKAM, you can be buying, just not anything real dynamic just yet. MPC, another one that if you bought on positive trading today, when it came back down and closed here, you would have closed it out. That turned it into being a bad looking chart. You can always buy it back if it opens positive, but right now the probabilities are not good for you. And Riot, nothing. Wouldn't be long or short. You're sideways. They couldn't get through the 50. I think we did SPWR, didn't we? Oh, maybe, yes. This one you buy. And we did that one. Okay. Oops. Square. You can be buying this one, especially if it comes up through this level. You got a lot of buy signals in here. Left-right combo, now up through the 50. Netflix, still a good strong chart, especially after the left-right combo. I would still think they're coming back up to test the top of the trend channel. Weight Watchers, that's a toughie. Big shooting star, evening star. If this opens lower tomorrow, they're still taking it back down to the 50 again. And VMW, you can buy this one. That's a good looking chart. True, J-hook pattern in progress, and you're right here at the breakout area. You can still buy this one on positive trading. And TXT, another one. There's your doji, Dragonfly doji, left-right combo. You can buy this one also. Best Buy, slow uptrend, but your main qualifier there is slow. TXT you can buy. Merck, nothing. Probably wouldn't be long or short right now. There's not enough direction. I think it was AKAM. All right. What we really need to see tomorrow is the Dow getting back up through the 50. But as long as we're in this mid range of a wedge formation, you still can stay with the charts that are giving you the best setups. Things that are breaking out are probably going to have more upside. All right, everybody. Oh, we're done early. Everybody have a good evening. We will see you bright and early in the morning. We'll see you then.